So the first part says that, if you are a resident and ordinary resident, okay. So if you are an ordinary resident, then all your global income will be taxable. Whatever you earn anywhere in the world, so you have to pay tax for it. Even your foreign income is taxable, okay. Income accruing, so here it says that income received or deemed to be received in India during the previous year, income accruing or arising or deemed to accrue or arise in India during the previous year, and income accruing or arising outside India. So in all the three boxes, its answer is yes, if you are a resident. If you are an ordinary resident. If you are not an ordinary resident, then only that income even if you earn income outside India, it will not be taxable. Only that income which is earned from a business connection in India, okay, that will be taxable in your hands. Suppose you have a business which is controlled from India, you have a law firm in India, so you are providing and receiving money in England, any abroad, so all that income will also be taxable in the hands of a not ordinary resident. If there is a business connection in India, or if the profession or business is set up in India and you are getting any income, even if you are a resident but or not ordinary resident, it will be taxable in your hands. In case of a non-resident, only Indian income will be taxed in your hands, and the money earned abroad will not be taxed in your hands. The foreigners who come to India, so if they earn any money, so they have to pay tax in India, but any income which they earn abroad, it is not taxable in their hands, okay. So let's do one question. So so the questions which I am showing, the paper will have similar questions in your, when you do the question, and the format will be as shared here. So it says that Mr. Ramesh and Mr. Suresh are brothers, and they earned the following incomes during the year 24-25, so which is the current year, okay. Mr. Ramesh settled in Canada in the year 1996, and Mr. Suresh settled in Delhi, okay. Compute the total income for the assessment year 25-26 under both default regime and old regime, okay, and advise which should be opted by both the assessees. So now we have to advise both the people that what kind of which scheme they should opt for, the old scheme or the default scheme. The default scheme is more liberal, the tax rates are more liberal, but you don't get any exemption. But in case of old schemes, the taxation rates are higher, but you are entitled for a lot of exemptions. So we have already done that. So then these are the various incomes which have been given. First is interest on Canada. Interest on Canada development bonds, only 50% of the interest received in India, okay, which is 35,000. Ramesh got it, and Suresh got 40,000 rupees, okay, fine. So this is given, the first part. So I'm just go through the question first. I'll just give you 5 minutes to go through the question. Just open your Excel sheet on your laptops and just go through all the heads, and then we'll move to the answer. The second is dividend from British company. The third is profit from business in Nagpur, but managed directly from London. Fourth is short-term capital gain on sale of shares of an Indian company received in India. Fifth is income from business in Chennai. Sixth is fee for technical services rendered in India but received in Canada. Seventh is interest on saving account deposited in UCO Bank, Delhi. Eighth is agricultural income from a land situated in Andhra Pradesh. Ninth, rent received in respect of house property at Bhopal. And 10th, life insurance premium was paid. This is not an income, but there is some life insurance premium which was paid by Mr. Suresh. So these are 9 to 10 items which are given. Fine. So what we have to do is we'll go to the answer slide. So have you gone through the questions? Anybody who is still, have you opened the question on your Excel sheet? So this is the question, and where the income of Mr. Ramesh and Mr. Suresh is given to you. Okay, Mr. Ramesh are their two brothers. Okay, and Mr. Ramesh on this thing, he is settled in Canada. Okay, he is a person of Indian origin settled in Canada, and Mr. Suresh is a person who settled in Delhi. Okay, so you have to calculate, how much, what will be their total income, how much tax they are going to pay under both the regimes, and which regime will be better for them. Okay, fine. And then, yeah. So this is Ramesh and Suresh. So Ramesh seems to be non-resident and Suresh seems to be resident here. Okay, because Ramesh has, is staying in Canada. Okay, and he has stayed in Canada only, settled there, so he's a non-resident for India. And Suresh is settled in Delhi, so there is no other information, so we'll assume that he's a resident. Okay, so then we have to just calculate, how much will be their income and what will be their tax liability, and where they should, what kind of a scheme they should go for. The new scheme, which is called the default scheme, where the tax rates are liberal and up to 7 lakhs, you don't have to pay any tax. Okay, and next year it will be 12 lakhs, but this year it is 7 lakhs for the year what we are studying now. And then as per the old regime, where the tax rates are more, but you get a lot of exemptions. Okay, all the 80 exemptions, like 80 seat exemptions and other things. So let's understand. The question is very simple. Since in your paper it will be coming like this only, so what will the pattern will be doing? It will be a similar pattern. Fine. So nothing will be asked out of the pattern. So if you are able to do one or two, then you can do all. If you just be more attentive. Okay. So then we say is so it is like this. So you have to observe the format always. In income tax, when you are solving a question, so whatever format I have used, so you have to use a similar format. Okay, where you say on the top, computation of total income of Mr. Ramesh and Mr. Suresh for assessment year 25-26. So on the top, it should be written like this. Or you can say computation of income for the financial year 24-25 within bracket assessment year 25. That will be also okay. Okay. So here we have mentioned the assessment year. Fine. So the first income is income interest on Canada Development Bond, only 50% received in Canada. Okay. Only 50% received in India. So that means, Mr. Ramesh, who is non-resident, so he will be paying only 50% because that is the money which is received in India, isn't it? So only 15% money which is received in India, he is a non-resident. So this income which is earning abroad, okay, out of that 50% money has been received directly in India. So he has to pay tax on that. So income received, accrue, arise, whatever, in India it is taxable even in the case of a non-resident. So rest 50% he doesn't have to pay tax because that is money which he is receiving directly in Canada and it's a Canadian income. Okay. So it's a foreign income, but the only difference was, though it was a foreign income, it was received directly in India. So that's why he is paying tax on 50%. Then Mr. Suresh, he has to anyway pay tax. Whatever may be his income, he has to pay tax. Okay. So अभी मतलब कितने बजे तक चलता है? हो गया? So Diya, your attendance is gone. So no problems? Okay. And don't send me a message that please give me attendance. Okay. So you have to be in time. Okay. So you can just send me a message, Diya, that you want our attendance. I'll give you the attendance. Ole, but be on time next time. Okay. So how many students are there? I think one. Just count, Niriti, how many students are there at the moment? Huh? 29 out of 50% attendance. I just saw the first room, it was full, everybody was there. Maybe the professor is very, strict. I am very lenient. So people are taking advantage, but I am telling you that, I'll cut marks now. If you make a small mistake, I am going to deduct marks. Don't tell me that you have given, I got less marks. Okay. I give attendance also, and people think, where is Sikka? He never comes. ठीक है चलो, lot of students are there, I don't know. So then we have a dividend from British company. So I am going to deduct marks in your group presentations. Fine. All the paper I can't do anything. If you do right, the marks will be there. But on a group presentation, I am going to be very strict. Okay, because I am going to ask you questions. Those people, I am not seeing them on the regularly in the class, this thing. So dividend received from a British company, received in London. Now tell me, Nirdi, how much is the money? Dividend from a British company, 20,000 rupees. Who has received it? Suresh. Has he? Sorry, this is the answer actually. So he has to pay tax on it because this is a money which is received. What's your name? हाँ? Which Gupta? सृजन. ठीक है. निर्दी इनका नाम डाल दो. सृजन गुप्ता. WhatsApp came late. So I am just noting down some names. So whichever I am going to be very strict now. इनका नाम क्या है? What's your name? हाँ? निलॉय. आपको अटेंडेंस नहीं मिलने वाला आज का. निलॉय का भी नाम डाल दो निर्दी. No attendance for today. Niloy and Srijan. It's 12:15 now, okay? So you can't be so late. So, so second was basically, you know, a dividend income, dividend from British company received in London. So Suresh has to pay tax on his global income, okay? Profit from, now this is very important, profit from business is Nagpur, but managed directly from London. So it's a business in Nagpur. Whether it is managed in London or anywhere, it is immaterial. It would have been the other way around, then it would have made a difference, but this is the business which is in basically in Nagpur. So it is a Indian income. So that means both the guys have to pay tax on it. Okay, so it will be included there in their income. Is that okay? Then short-term capital gain on sale of shares of an Indian company received in India. So will it be taxable, Navya? So both the guys have to pay tax, or there is some, benefit here. This is an Indian, just read the this thing. What is the this thing? This is basically line item number 7, short-term capital gain on sale of shares of an Indian company received in India. So anybody? Huh? Both have to pay tax because in Indian income, okay? Whether you are resident, non-resident, it is immaterial, okay? Fine. Then we have, income from, are you able to see the Excel sheet? So then we have, income from, this we have done, okay? So income from business in Chennai. Income from business in Chennai. Will it be taxable in the hands of a resident, non-resident both, or only in one guy? Is it taxable? What's your name? Diya? Huh? Adya. Okay. Diya bhi aise kuch hai kuch. Diya is there or not? Huh, Diya is there. Okay. You know, my small child we have named her Diya. My friend's daughter, this thing. Okay. So, Adya? So, who has to pay tax? Both the guys. Okay, both the guys. Okay. So, then we have income from business in Chennai, okay. Interest on saving account, which is UCO Bank India. So Nidhi, what is the law here? Both have to pay tax. Now, you must know that if you get some interest from a bank account up to 12,000, or 10,000, it is 12,000, ATT 10,000. So up to 10,000 it is exempt. So whatever interest you receive on your saving account, up to 10,000 you don't have to pay tax. But this is in the old regime. In the new regime, you have to forego that exemption. Okay, because the tax rates have become lesser, so that exemption has been taken off. So if you earn an interest on a saving account, that interest is exempt in your hands up to 10,000 if you are going to adopt the old scheme. But most of the time nowadays, people are going for a new regime where you have to pay, you don't get any exemption. Fine. Maybe later. Okay. Fine. So, in this case, that means interest on saving account, so it is 0, 0. Fine. Is it 0 I have written? 7 and 12. Okay, 7 and 12. So, he has got 7,000, he has got 12,000. Isn't it? So that means this will be totally exempt under the old scheme, and this will be exempt up to 10,000. So 2,000 he has to pay tax if he goes for the old regime. But in the new regime, there will be no exemption on this account. Okay. So then we have interest on agriculture income from the land situated in Andhra Pradesh. So if it is agriculture income, then there is no tax. So if you are earning any income by way of agriculture income in India, then there will be no tax on that income, okay? Provided the land should be, as per the income tax rule, it should be agriculture land. You can't have a land in Delhi as agricultural land, okay? So if you have land in Delhi and you're saying I'm doing agriculture and earning some money, you have to pay tax on that. So income tax defines what are the kind of land which are, they are considered as agricultural land, and if you derive income from those land, then they are totally exempt, okay? So here, agricultural land situated in Andhra Pradesh, so we assume that as per income tax, they are exempt, okay? We are not questioned that. Then rent received in respect of house property at Bhopal, okay? Now, whatever rent you receive in India, you get a 30% standard deduction. Suppose you are getting 1 lakh rupees rent, you have to pay tax on 70,000 rupees. 30,000 will be, you will get an exemption. Okay, fine. So, so the amount which has been given here is after working out that 30% deduction which is given at the bottom. Okay. So, 1 lakh, 70,000, 60,000, Suresh, 42,000. Yeah. What's the question?
I'm saying for agriculture, if you're using, let's say, hydroponics to grow, let's say, using greenhouse in a city space or industrial space, then does it count as agriculture?
No, not industrial space, anything which you are using as an agricultural land and doing something in the industrial space. And the land, it's not the industrial space, but it is the land which is, should be a rural land, which has been defined by income tax as an agricultural land.
Like
it can't be within the, the municipality of a NCR or within, Delhi, Bombay, Calcutta. It should not be in a urban land. Okay, if I am using an urban land and using agriculture, then of course the land has been defined in agriculture. We are not gone to that. You can just Google and find out what are the land which is considered, has been defined as an agriculture land by income tax authorities. Okay. So, so here in, so that means now what will happen is we calculate their income. Okay. So total income will be 18 lakh 34,000, 19 lakh 14,000. Okay, so that is the income which we derive at, and then they will get some exemptions as per the old regime if they wish for that. Okay, so that will be 7,000 on account of, there is a life insurance premium which has been paid by Mr. Ramesh. Mr. Ramesh, 7,000. So that is exempt under section 80C. So up to 1,50,000. If you put some money in provident fund, insurance, so this we have done in the last class. I think most of the students were not there. So, so you can just go back to the Excel sheet and see that. So up to 1,50,000 rupees, if you invest some money in various schemes, you get an exemption. Then 80T exemption, which is basically the this interest income. So then we have the total income. Okay, fine. So this is 18 lakh 27,000 is the income of Mr. Ramesh, and 18 lakh 74,000 income for Suresh. Okay. Now we have to calculate the tax. So we'll understand how the tax has been calculated. So which will be as per the old tax, as per the new regime, tax as per the old regime. So as per the new regime, which is this, as per the new regime, the tax is 2 lakh 60,000. Okay, fine. And as per the old regime, the tax is 3 lakh 75,000. So he will go for the new regime, isn't it? Yeah. Life insurance, where it is? Yeah, 7,000. No, this is 80 TTA. Even I was getting, when you look from far, it tends like your life insurance. No, it is actually the interest on this thing. Okay, fine. So whatever we have done, it is right. Okay, don't worry about that. There is no, error here. Okay, so we are going to work out, the next step is to work out the tax liability under both the regimes. Okay, I'll show you how it has been calculated. Okay, how we calculate, there's a formula. You have to just put that formula and calculate, and it will be, coming at a very, this thing, it's a very easy one. Okay, so as per the old scheme, the tax rates are, as per the new scheme, the taxes are lower. As per the old scheme, the tax rates are higher. So definitely both will go for the new regime. So how the tax calculation, so you have to make a tax calculation sheet. Okay, so you should remember this format. So the moment the question paper is that you put all that. Okay, so Suresh and Ramesh. Okay, so first old regime, and then second new regime. So this is new regime, this is old regime. So old regime, the tax rate is on first 2,50,000 0 tax, on next 2,50,000 5% tax, on next 5 lakhs 20%, exceeding 10 lakhs 30%. So these are the slab rates as per the old regime. So up to 2,50,000 there is no income tax. 2,50,000 to 5 lakh the tax rate is 5%. Then from 5 lakh to 10 lakhs it is 20%. From 10 lakhs above it is 30%. Is that okay? So this has been written like this. So then you have to just calculate that on the first 2,50,000 zero. Then if you just go and see the formula here. So this is on 2,50,000 the tax is how much? The straight away it is 5%. Okay. So you put the tax here 5%. Okay. Then on the 5 lakhs the tax is 20%. It is 1 lakh. On the 10 lakh the tax is 30%. So first calculate the tax at the various slab rates applying the percentages. Okay. Now the tax comes to basically now the tax is 3,74,000. Okay. So how we have done it? Basically, so all this so basically it is 18,74,000 minus all this. Okay. So if you just calculate here all this, so that means there is the tax will be straight away calculated like this. Okay. So all this is coming to 20 lakhs. So that means his income total tax will be all this, which is 3,74,000. Is that okay? Fine. Because the income is 18,74,000 and all this is basically up to 20 lakhs. So that means 3,74,000. 4% cess. So that means his tax will be 3,89,000. Okay. Is it okay? What we have done is that we have applied the tax rates. Okay. Up to 2,50,000 zero, then 2,50,000 5%, which comes to 15,000. Then on 5 lakhs it is 30,000, which is 10%. Then on the slab rate, so it is like this here. Okay. Up to 2,50,000 zero. Then the next 2,50,000 12,500. Then 5 lakhs 20%. Then up to the next 10 lakhs and above it is 30%. Okay. Fine. So all this is how much? Exceeding 10 lakhs. Fine. Okay. So exceeding 10 lakhs. So so D8 so there's a formula here actually, sorry. There's a formula here which says, so if which says D4 minus D8. So D4 is this minus D8, which is this, fine, D8. Okay. D4 minus B8. Okay. Fine. So it is 18,74,000 minus 10 lakhs. On that 30% tax has been covered. Sorry for the goof. So it is basically what we have done is that his total income is 18,74,000. Okay. So 18,74,000 minus 10 lakhs. How much it comes to? 8,74,000. On that we have calculated 30%, which is here. Is it clear to all of you? Just check. Just check again, and if you have not followed, please ask me. How we have calculated is that the total income is 18,74,000. On the first 2,50,000 no tax. This is a liberal scheme, the new regime. And on the next 2,50,000 the tax is 5%, which is 12,500. Then on the next 5 lakhs the tax is 20%, which is 1 lakh. On then above 10 lakhs the tax rate is 30%. So how we have calculated is this figure like 2,62,000 is basically taking this figure minus this into 30%. So we get this number. So that means the total tax will be 3,74,700. Okay. And on that we will add 4% cess. Is it clear to all of you? Please raise your hands who have not followed it, or who want that I should explain again. Just raise your hand if you have not followed. I'll again explain. Have you all followed? It's a simple. Even I got a little confused, but I think you have well understood. Okay. So then, as per the new regime, So as per the new regime, the tax is 19 lakh 14,000. Okay. So if you go back to the question, here we have taken 18 lakh this thing. Sorry, we are doing for this guy Suresh. So Suresh has an income of 19 lakh 14,000 as per the new regime, but as per the old regime it will be 18 lakh 74,000. So there is one more step here. This is the new regime, and these deductions is taken only under the old regime. Okay. So that means on this the tax has to be calculated for the old regime, on this the tax has to be calculated for the new regime. Okay. Similarly for this guy, so Ramesh, so that will be as per the new regime and this will be as per the old regime. Is that okay? Fine. So we go to the tax calculation. Yeah. Ananya, are you following it? Okay. Maybe I had not just gone through recently, so that's why I was just getting a little bit. Okay. So then we have to calculate the tax. As per Suresh ka jo new regime hai, the income is 19 lakh 14,000 and Suresh old regime is 18 lakh 74,000. So we can go and check here. It is coming from the reference only A1, okay, which is F17 is a number here, and here the number is F13. Okay. So which is here. So this is income. This is 18 lakh 74,000 and 19 lakh 40,000. So these figures have been, yeah.
As per new tax regime, you will get these benefits, right?
Yeah.
But like if you are accounting for new tax regime, you are taking tax on the old tax regime for these benefits. So is it the correct approach?
No, I couldn't get you that. Suppose we are taking these 19 lakh 14,000. This is what new regime. So on new this thing. So what I have done is on the calculations. What I have done doing is that I will be calculating 19 lakh 14,000. I will be putting here. Okay, fine. So I will be getting this is as per the new regime. Okay, without any deductions, and this is after deductions 18 lakh 74,000. This is after deductions. Okay, so look at this. This is after deductions. After this deduction. Okay, this deduction, and this deduction. So this is the old regime. So old regime, your income falls, but the tax rates goes up. In new regime, the income goes up and the slabs falls. Okay, you have to pay lower tax, isn't it? So where is the confusion, Ananya? Is it okay? Because this is the question which we have done, in the last MBA also. That's why I have not rechecked it. I thought it has been done and it's been already taught. So there can be some errors. Okay, so please look for that. Okay, but there is no error here. So then as per the new regime, up to 3 lakhs, no tax. 3 lakhs, 3 lakhs, next 3 lakhs, the tax is 5%, so 15,000. Then next 3 lakhs, the tax is 10%. Then next 3 lakhs, the tax is 15%. Then next 3 lakhs, the tax is 20%. Then after all this, then the remaining on that the tax is, we just add them up all. So that means, after this amount, that means after 15 lakhs, you are supposed to pay 30% tax. Okay. So the income which is beyond 15 lakhs is 4 lakh 14,000, which is nothing but 19 lakh 14,000 minus 15 lakhs. Okay. Fine. Is that okay? So he has to pay tax 30%. So his tax liability will come to 2 lakh 74,000, 4% cess. So the tax will be 2 lakh 85,000. Is that okay? So I am just going to again tell you. So they are old regime and new regime. So this is a new regime. In new regime, on the first 3 lakh, there is no tax. But in the old regime, up to 2 lakh 50,000, there was no tax. So in new regime, it's more liberal. Then next 3 lakhs, you have to pay 5%. There, on the next 2.5 lakhs, you have to pay 5%. Then here, 3 lakhs, you have to pay 10%. There, on 5 lakhs, you are supposed to pay 20%. But here, the tax rate goes to 10% and 15% and is much liberal. Okay. So, so you keep calculating the tax, and because the income is 19 lakh 14,000 minus all this income, the balance comes to 4 lakh 10,000. On that, you are paying 30% here. Okay. Fine. Fine. Is that clear? So that means, so which is better, the new regime or the old regime? Old regime is, he has to pay more tax. So new regime, the tax is only 2,85,000. Is it okay? Now we go to Ramesh here. So in case of Ramesh, the tax is, the income is 18,27,000 as per the old regime, and as per the new regime, it is 18,34,000. So there's a little difference. So if we go to the question here, so we'll find here, which is basically Ramesh. So he's getting only 80 TTA benefit. Okay, so that benefit will not be available because this is the income on interest on a bank account. So under the new regime, you don't get this benefit. So which means that his income will be 18,34,000 as per the new regime. As per the old regime, it will be 18,27,500. So you have to just apply the taxes and see which scheme is better. So here the difference is only 7,000. So the difference will be not much here. Okay, so it will be because the tax will fall down because the scheme is more liberal here. So tax is coming to be 2,60,000. In this case, it's coming to 3,75,000. So he will go for the new regime where the slab rates gives him the more benefit. Is that okay? Is it clear? Any doubts? Navya, is it clear? Chokalingam, just go through this thing, just see the calculation, check the calculation on an Excel sheet if you have all followed it. Okay, fine. So only thing is that you have to just make that template and remember it and just plug in that template in your paper and just solve it. So it is automatic through the calculation it will come out. Okay. Have you followed?
Yes, I'm just doing it.
Just have a look. You not brought your laptop?
Sir, वो मतलब अभी चल नहीं रहा.
अच्छा, तो चलो एक बार देखो उसको. Nirdi, any questions? Yeah.
Yes, sir. The cess is the same in the new regime also.
Huh?
I thought the cess was removed in the new regime.
Which one?
The cess.
No. Cess is there in both the regimes.
Okay.
Cess is there in both the regimes. So cess is not removed. So it is a wishful thinking that it should have been removed, but the government has, once the cess was announced about 20 years back, it has still remained. It is not going so easily. Okay, the government doesn't want to lose the revenue. Fine. When the government imposes a tax, it's very difficult for them to take off that tax. Okay, so that 4% cess is always there. Fine. So the only difference between the new regime and old regime is that new regime, you have to pay a lower tax rate. Okay, and you get a much higher tax rates. Okay, much higher slabs. So you have to pay less tax. Where in the old regime, you are entitled for a lot of exemptions, but you have to pay higher tax. Okay, so if you have a lot of exemptions, then go for the old regime. If you don't have any exemption, you should always go for the new regime. Okay, yeah.
Till how long do we have both the options?
Huh?
Is there a time period till how long we have both options to choose from?
When as per default, everybody is in the new regime. As per default, everybody is in the new regime, but when you are filing your return, you have to choose. Okay, so you have to remove the default and say that I want to be in the old regime. Then it will allow all the deductions to you.
When does the option go away?
When the option goes away, when the government decides that. Okay, the government says both the options are available at the moment. So maybe in another 2, 3, 4 years, the government is going to take away the option. So abhi tak government says both options. First, in the last year, the old scheme was the default scheme, and the new scheme was you could choose. But now the new scheme has become the default scheme, and the old scheme becomes a scheme which we have to make a choice. Okay, like if you are working in a company, you have to tell your company that I am going to be in old scheme or new scheme when the year starts. Okay, because they have to deduct tax from your salary equally every month. So they are going to, if you are putting your money in some scheme, so they give you the benefit. If you say that I am in the old scheme. If you say I am in the new scheme, so they will all ignore everything, they will calculate the tax as per the new regime. So you have to tell them in advance. But while filing your return, you can change your stance also, if you want. When you are filing your return yourself, the employer doesn't file the return for you, you file your own return, you can always make a change at that time. But your employer will assume that you are going in old or new depending upon your declaration. You have to declare it well in advance which you are going to, because you can't shift also in it. Once you have chosen it, so they are going to adopt that only. You say it's new, old scheme, then they'll give you all the benefits of all the deductions you have. If you say new regime, they're not going to give any benefits and deduct tax accordingly and deposit the government. But at the time of filing your return, if you say that I want to switch, you can do that. Okay, it suits you. If so, so another one more question, small question, then we'll end the thing. So the second question, you don't have to calculate the tax rate, but in your exam there will be a question where you have to calculate the tax rate. Okay, fine. So this is the question. Okay, just read this question. Can you read, Ananya?
Compute the total income in the hands of an individual aged 35 years being a resident, an ordinary resident, resident but not ordinary resident, and non-resident for the assessment year 2024-25, assuming that he has exercised the option of shifting out of the default tax regime provided under section 115 PAC.
Okay. So now that couple of things here, that this guy has moved out of the default scheme. So he says that I'm going to go for the old scheme because the default scheme is a new one. Okay. So he says I don't want to be the new scheme, I have to be in the old scheme. Now this guy's age is 38 years. Okay. So if you are up to 60 years, the slab rates are different. Up to above 60 years, the slab rate changes. Above 80 years, the slab rate changes. So you have to choose the right slab and pay the tax accordingly. Okay. Fine. But in this question, you don't have to calculate the tax. So you should not worry about that. So his age is 35. That means old scheme, the old slabs up to the age of 60 years. Okay, will be applied. So now I'm just going to take a head, and you have to tell me by raising a hand whether it will be taxable or not. Okay. The first is interest on UK development bond 50% received in India. Interest on UK development bond 50% received in India. So 10,000 rupees. Okay. So if you are a resident, you have to pay tax or not? Pay. But if you are a non-resident or not ordinary resident, in that case, what will happen, Navya? Half, 50%, because 50% is received in India. Okay. Then second, income from business in Chennai, 50% received in India, 20,000 rupees. Niyashi? So this is income of 20,000 rupees. So it will be taxable in all the cases or some exemptions? All the cases, because this is the income which is from business in India. Whether it is received in India or not, it is immaterial. It's an income which has been derived in India. So whatever is the residential status, you have to pay tax. Okay. Then short-term capital gain on sale of shares of an Indian company received in London. Short-term capital gain on shares of Indian company received in London, 20,000. Okay. Who is going to put just raise a hand somewhere at the back. Dia? Yeah, tell me. Taxable in all the cases. Why? Because it's an Indian income. Okay. Then we have dividend from British company received in London. Yes. Dividend from British company received in London. Who has to pay tax? Huh?
If you're non-resident offender, you won't pay tax to India, right?
Dividend from British company received in London. Yeah. So you don't have to pay tax if you are a non-resident. But if you are not ordinary resident, then also you don't have to pay tax. Okay. Only the what is the income? Just hold on. What is the income which will be taxable in case of a not ordinary resident? In what circumstances the income is derived outside but still taxable in the hands of a not ordinary resident? So what is that case?
If that person has been staying in India for
No stay criteria. There is one type of income. I'm asking you a question. Just raise your hand if you know the answer. Okay. Ananya knows it. Anybody else? So if you are a not ordinary resident in India, not the in between. So we have a ordinary resident, not ordinary resident, and then non-resident. एक तो हो गया pure resident, एक हो गया resident but not ordinary resident. So I'm talking about the second category, which is the income which is earned outside India, but still it is taxable in the hands of this guy. Whereas the law says that any income which he earns outside, he's not going to pay tax. So if you are a non-resident, if you are not ordinary resident, you don't have to pay tax on your foreign income. But one for such foreign income becomes taxable in the hands of a not ordinary. What is that income? Yeah. पता है? नहीं पता है? Fail?
Sir, I just know.
नहीं? हाँ?
Sir, like if the
What's your good name?
मुग्धा।
तो पढ़ो तो सही, बताओ तो सही, कितनी बार तो हमने करा है, देखो किसी को पता है, शी नोज इट, ओके, anybody, the first slide which I presented today in the morning and many times there is one income, remember that's the only differentiator, that is the only differentiator. I'm just going to take you that slide again, okay, and I know you know the answer, the scope slide, okay, go to the first one, okay, just go to this slide and now tell me, read this from this slide and just raise your hand. कौन सी ऐसी इनकम है जो अर्न तो आप बाहर रन कर रहे हो लेकिन आपको टैक्स इंडिया आपको देना पड़ेगा, इफ यू आर द इन बिटवीन, इफ यू आर अ कैटेगरी हेयर, इफ यू बिलोंग टू दिस कैटेगरी रेजिडेंट बट नॉट ऑर्डिनरी रेजिडेंट, यू हैव टू स्टिल पे टैक्स, दो इट विल बी एन इनकम विच यू आर अर्निंग अब्रॉड but still you have to pay tax in that. An example would be like, what would be the example? Give me an example.
If a business is situated in India, like
Business is not, business is controlled from India.
Like Nagpur example, we took
Yeah.
last case.
Yeah, we are right. Okay, like suppose you are a lawyer, for example. I'm just giving you a professional income. You are a lawyer. Your law firm is in India, but you are actually settled, say, in England, and you are getting some fees from there, from an English guy. Okay? And that income belongs to this law firm, which has actually been running from India. It has a business connection in India. So even if you earn an income there in England from a Britisher or from anybody else, it's a foreign income, you have to pay tax in India. Okay? Look at this box. Yes, even if such income is not received or brought in India during the previous, yes, but only such income is derived from a business controlled in or profession set up in India, otherwise no. So any profession which has been set up in India, if you have a firm, okay, like suppose you have a firm, like we have, which is the firm, law firm, the biggest law firm in India, Mangaldas. Is that? Have you heard of that Mangaldas firm? Is the biggest firm. Okay, anyway, chalo, there is a firm called Gagarath and Company, which is also a very big firm in India, in Bombay. Okay, suppose you are a partner of that firm. It's an Indian firm and you are settled in America, USA, and you get some money for doing a case in America, and the money goes to Gagarath and Company. But you received in London, so you have to pay tax on that because that income belongs to your law firm which has been established in India. So it has a connection in India. Is that okay now? So similarly, if the business is controlled or a profession set up in India, even if the business which is controlled in India, suppose there is a company in England which is controlled from India. If the person gets an income and he happens to be a resident but not ordinary, he has to pay tax on that. Only one exception. Fine. Otherwise, the law is very simple. If you earn anything outside India, it will be only taxable in the hands of resident. Like people like us, we are resident. Whatever income we are going to earn, whether from India or abroad, we have to pay tax in India. But if I happen to be a non-resident or Indian or a resident but not ordinary resident, my entire income which I earn abroad will not be touched for tax in India. I don't have to pay any tax. Suppose I am a not ordinary resident or a non-resident, I don't have to pay any tax. Whatever income I am earning abroad. Only one exception is if the business is controlled from India or if the profession which was set up in India, and if I am deriving income from that source, then I have to pay tax on that. Is that okay? Okay, so we go back to the question. So, the long-term capital gain on sale of plant at Germany, 50% gains are received in India. So, long-term capital gain on sale of plant at Germany. So, this is a foreign income and 50% of the gain is received in India. Okay. And what is the amount? 40,000 rupees. So, 40,000 rupees. So, if you are a resident, Chokalingam, you have to pay full tax on 40,000 or is there any exemption? If you are other two categories, then? Because 20,000 has been brought in India. The income is coming to India. That's why you are paying tax. Okay. Then, income earned from business in Germany, which is controlled in Delhi. 40,000 received in India. So, it is 70,000. So 40,000 received in India. So 70,000. Okay. So if you are a resident, then what happens at the box? हाँ, क्या नाम है आपका, भूल गया मैं. Mukund, yeah. Mukund, then suppose 70,000. Do you have to pay tax in India if you are a resident? Okay. But if you are not an ordinary resident, then what happens? Is the business controlled from India? That was an exception which I discussed. Okay. So how much you are going to pay tax on that? 70,000 or 40,000? 70,000 or 40,000? 70,000. But in the case of 40,000, who is going to pay tax on 40,000 only? The non-resident. Okay. So the non-resident guy has to pay tax. Now let's see. Let's go to the answer. So it should be 70,000 in all the cases, but 40,000. So yes. Now in this case, you find only 40,000 is in the hands of a non-resident. The income which was brought in India, which was received in India, he has to pay tax. Not brought, but received in India directly. अगर directly India में आ गया पैसा, तो आपको tax देना पड़ेगा, even if you are a non-resident. Okay, but the income was earned outside, isn't it? It's a foreign income. Okay, fine. And the source was that the business was controlled in Delhi. So for non-resident, it doesn't make any difference whether the business was controlled in Delhi or not. Only when you are in the middle category, then you have to pay tax. But if the business was controlled from Delhi and it's a foreign income, you don't have to pay tax if you are a foreigner, if you are a non-resident. But if the income is received in India, you have to still pay tax. So in this case, 40,000 you have to pay tax. Is that okay? Okay, so this is a very important question, and the question will be like that only in your exam. Then profits from business in Delhi but managed entirely from London. Yes? There at the back. Anybody? So what is the amount? 15,000. Profits from business in Delhi. So this is an Indian income. So everybody has to pay tax. No exemption. Whether it was managed from London or not doesn't make any difference. Everybody has to pay tax. It's an Indian income. Is that okay? Then we come to income from house property in London, deposited in a bank at London and brought to India, 50,000. So, and the question says computed. That means this is taxable. So you don't get any exemption there about that 30% because it's been computed and given to you. Okay. So income from house property in London, deposited in a bank at London, brought to India. Brought to India. So if it is brought to India, of course, as a resident, you have to pay tax. Anyway, it has been brought to India. So means what? How much is that? 50,000. Okay. So 50,000 rupees, if you look at here, so income, but later on remitted to India. See, what happened is that if you earn an income, okay, and the amount is received in London only, and you have transferred this money to India, then you don't have to pay tax in India. Okay, it is just like you have earned an income and you are spending that money in India. Okay, so you brought to India just to spend the money. So no tax, even if you bring the money in India. But if you receive this money directly in India, then in that case it will become an Indian income. Remember that. This question is very important. Income from house property in London, deposited in a bank at London. So that means the money was received in London. It's a foreign income earned in London, received in London. So that means only a person who is resident, he has to pay tax. Other guys don't have to pay tax at all. But later on remitted to India. In all the three categories, you are bringing the money in India, it doesn't make any difference. Okay. First category, as a resident, you have to pay anyway tax. But other categories, the taxable status is not going to change. Because the money was earned in London, received in London, you brought to India because you were traveling to India and you have to, fine. Suppose you are earning some money in India, you are going abroad, you send that money, okay, there in the other country and just take out the money in the bank there. You don't have to pay tax there, isn't it? It is your money which you have earned in India, you have to pay tax here. You are just traveling to England and you're bought off, maybe forex notes or whatever, and you are spending there. So you don't have to pay tax. It's not an income which you are earning, it's just an expensing. You are doing your expenses there, isn't it? Is that okay? Fine. So remember that. Then Okay. So dividend from British company received in London, dividend from British company हो गया, long term cap ये हो गया, कहाँ तक हो गया था? यहाँ 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 अच्छा. Interest on debentures in Indian company received in London. So it is an interest in debentures. So everybody has to pay tax, whether it was received in London or anywhere, doesn't matter. So all have to pay tax because this is the Indian income which the money has been income has accrued in India. Okay. Then interest on debentures ये हो गया ना. Then fee for technical services rendered in India but received in London. Again, it has been the services have been rendered in India. You have to pay tax, whatever is the category. ये तो Indian income है, you have to pay tax, whether you receive in London or anywhere, no problem. Then profits from a business in Mumbai managed from London. Again, this is the money which you are receiving, earned in Mumbai, India, you have to pay tax, whatever is the category. Then income from a property situated in Nepal received there. So it is a money which is received there. So that means if you are a resident, you have to pay tax, global income taxable. But in case of a non-ordinary resident and non-resident, you don't have to pay tax because Nepal is an outside country. It's not an Indian, it's a non-resident. Okay? So it's abroad, so you don't have to pay tax. It's an income earned abroad. Now, past, now this is very important. Past foreign untaxed income brought to India during the previous year. Past untaxed income. You have earned some money somewhere, it is untaxed. It doesn't make any sense. So for India, India is not going to tax you if you bring that money in India. Okay. So which is how much? Past foreign income brought to India. How much is the amount? So just look at the answer. So this is very important. Past. So nobody has to pay tax on it. This is the past income. So you have to pay only the income tax for the previous year. For past income tax is not going to levy tax on the income which you earned in 1950 or 60 or 70s, okay, or 90s, whatever period. You brought that money in India, so government is not going to tax you in India now. Is that okay? Is it clear? So remember this. So then we have income from agricultural land in Nepal. So this is a Nepal land, so you have to pay tax because it's not in India, okay? Fine. Gift received on occasion of the wedding. On wedding, whenever you receive an interest or a gift, it is not taxable. Okay, fine. So interest on saving bank account in State of Bank of India, this we have done. Income from business control from. Just go read this and ask me a question. So we are going to end this. Okay, just go through all the other things. Okay, because the question will be coming from here. Okay, so don't miss out any line item which you don't understand. Though I have tried to cover everything, but if there is any line which you think is you have not followed, please ask me. So yet another 2 minutes to go. Okay. Try to do this question at home again. Okay. My advice will be, because there will be an n-term question on this, on a similar pattern. Okay. So here you have to just calculate the overall total income. Okay. So here, he has got all the exemptions, like, interest on saving account of 10,000 exempt because he's opted for the old regime. Okay. He is not going for the new regime. So we have given him the 10,000 reduction here. So the total income will be after taking all those things and calculating his income. Is this clear? Just go through. One advice will be just go through. I won't be doing it again. Okay. Because now I will be moving to the next chapter. Okay. Just understand this question again. And if you have any issues, ask me. So tomorrow when I meet, my first question will be anything which you have not followed. Okay. So please go through. Okay. Fine.